Hey there, traders, and welcome back for episode 108 from the StockBandit.tv. It is a place you can always find trading videos to make you better. So I hope you've had a wonderful weekend and you've been able to rest up and get ready for a brand new week of trading. Let's take a look at the major averages, see what the big picture looks like, because we know that's what's going to influence and impact most of those individual stocks that you and I are going to be trading in the week ahead. So understanding some key levels, understanding kind of the characteristics of what's taking place in the big picture really will help to drive that action and give us a better understanding and enable us to be a little bit faster acting and more effective when it comes to locating those best trades out there to be putting our money into. So heading into the week ahead, here's what we have. The NASDAQ has, over the past several weeks, created both a higher high by continuing its uptrend, and then of course breaking the prior low just last week. So on Monday of last week we broke through this 2040 area, and that created a lower low. So in that regard we have a little bit of an expanding range taking place here. So that may mean some added volatility in the weeks ahead, and that could be a really good thing for us as traders and for this market to kind of help separate some of the stocks that are just following along with whatever trend happens to be there versus which stocks really have some good momentum behind them. So I want to take note of that. We're getting some range expansion here to a slight degree, and yet in the near term, over the past few weeks, two to 3 weeks, what we've done is we've sold off with a pretty good sell-off here, and then we're starting to get a bounce here and starting to retrace some of this move that we did just make off of the highs in October. And so I also want to note, as we're moving up from last week's lows, we're doing so on lighter and lighter volume. So we're getting some weak volume on this price bounce, and that discrepancy or that divergence is one that we definitely want to take note of as traders. Anytime price is moving up and volume is moving down, it's time to pay very close attention and be on your toes for a possible failed bounce. Now, I'm not predicting that that's what's going to occur here. I just want to point it out. That's what I do. And so as we move back up, there are a couple of levels I'm going to be mindful of if they are reached. The first one is right here where this yellow trend line ends. That's the uptrend line that goes all the way back to March of this year. It was broken just recently, and it was broken at the 2133 level. So that's about 21 points above Friday's close. So if we do continue higher, that's the level I would expect to see some resistance met. The next one beyond that is this white trend line, which I'm extending into red here. That's the 2150 level, and of course that goes way back all the way into 2008. We saw it tested a number of times in 2008. You've also seen me highlight it here a number of times as well. So if we do get back up to that 2150 level, then that could be another area where this bounce may stall out if it reaches that, of course. So I'm going to be watching those levels on the upside. I'm also going to be watching volume along with the behavior and price. And of course, if we do head lower from here, you can bet that the bears are going to be on that as a possible lower high as compared to the previous highs set back in late October. So that's kind of the technical and the psychological look of this picture, what's taking place right now. Moving into the S&P 500, here again we've got a little bit of a V-shaped bounce taking place here over the past week. It's also coming on lighter and lighter volume, so you see volume is diminishing and decreasing as price is moving back up. The next level to be keeping an eye on is this 1074 area for the S&P 500. That's proven to be both resistance and some support over the past several weeks. If we are able to get back up through the 1074, then this 1100 area, which is of course a key level here for this index, and that marks the highs. I think 1101 is where we actually topped out, but that's the next level to the upside to be watching. But for now, we're getting a light volume bounce after a pretty good sell-off. Let's see if it evolves into a lower high or not. The S&P 500 still does have higher lows in place, so the trend is still up by that measure. For the Dow, it's a little bit more clean cut. We've got both the uptrend line from the March low and this same horizontal trend line right here, right around the 96.30 to 96.80 area. So that's kind of a wide 50-point range, but for an index that's at 10,000 and change, that's not too much. So that's proving to be some support. We also have resistance up here at the 10,120 area. That's only about 100 points away. But here again on the Dow, we are bouncing over the past few days on diminishing volume, and that's a negative price volume divergence that I certainly want to be aware of as a trader heading into this brand new week. So thanks again for joining me for this episode. I will be back soon with more videos, but in the meantime, trade like a bandit.